Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist with the ABC.
I'm Stephen Mayne, contributor, Intelligent Investor, founder of Crikey and shareholder activist.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are the Money Café. And we're today joined by a very special guest, Federal Treasurer, Dr. Jim Chalmers. Welcome to the show, Jim.
Thanks very much, guys. It's an honour to be surrounded by all this journalistic and economic heft in a beautiful cafe in Melbourne.
We are in the cafe over the road from the ABC, Blondie.
We are. Very nice. The trams are rattling past. You've just flown in, Treasurer. So, look, give us an insight into your campaign. You're flying all over the country, you know.
Yeah.
How many media interviews do you do a day? How many fundraisers are you going to attend for the campaign? Like, are you on the 5 a.m. strategy call every morning? What's it like?
I am on the early call. Yeah, there was one this morning, one every day. And this week gives your subscribers and listeners a bit of a sense of it. I think this week I've gone Brisbane, Perth, Sydney, Melbourne. I go back to Sydney, then Brisbane, and that's a pretty normal campaign week.
And then when early voting starts, it'll be 8 hours a day on early voting in Logan, defending your 9.5% margin.
Yeah, well, you might. I don't know if you're joking about that, Stephen, but you know from representative politics that you never take anyone's vote for granted. And so, yeah, I will be doing a fair bit of pre-poll, and I like that part of it. It's good to be able to get a chance to talk to someone on their way into the booth, and that's what a couple of weeks of pre-poll lets you do that.
Are you feeling confident that the government can hang on to its majority, or are we looking at a minority government?
Oh, I think that's still to be determined. I mean, we're speaking at literally the halfway point of the campaign, so 36-day campaign. I think there's 18 days left, and I think that the result's not determined yet. I think, obviously, people will make up their mind in the next few weeks, and that's why we're, again, kind of not taking any outcome for granted. I think it's going to be an absolute squeaker, this election. I think it's going to be incredibly, incredibly close. A very big chance that we don't even know on election night. I think it'll be that close, and so that's why we're working our tails off around the clock and around the country.
Have the issues that you've sort of been discussing on the campaign trail, has there anything surprised you? Is there a topic that's, when you started this, you didn't think that, you didn't expect that to be raised, and it's been raised?
Oh, there was something I thought would be raised, but I didn't think it would just absolutely blow up, and that's work from home.
Right.
I think that's been we've had a view about work from home is that it's an important part of families being able to balance their responsibilities. Obviously, that's not available in every sector or every kind of job, but where it can be made available, we think it's a good way to help people juggle things. And so we've always had that view. The position that the coalition took, very anti, and then they've had to try and clean it up. And when you knock on people's doors or you spend time out and about in communities around Australia, as we have been doing, one of the things that gets raised with us most frequently is work from home.
Right.
And if you'd asked us, was that going to be the case a few months ago, we probably wouldn't have anticipated that. It's been a huge issue, massive, massive issue.
Wow. The other thing, I guess, Treasurer, is as well as a campaign, there's still an economy to run, and there's the little matter of a trade war that's exploded during the campaign. Like, how have you tried to balance the campaign and your actual job?
Yeah, I mean, this has been a big challenge. You think about, I've had meetings now with my counterparts, phone meetings or video meetings with my counterparts from Korea, Indonesia and the UK. So that gives you a bit of a sense of the wheels of government still turning in a really uncertain time. But if you think about last week I convened the Council of Financial Regulators. I spoke to all of the major bank CEOs. I spoke to the super sector. I got the BCA to bring together a forum of major employers, and that's because the governing is more important than the campaigning. And I think that's always the case, but especially the case when the world's going berserk. You guys followed it as closely as anyone in Australia, the way that there was that extreme volatility in the American market, global markets, our own market. And so last week was a good example of trying to err on the side of governing, particularly when things were so uncertain. And it does have there's a political choice to be made out of that as well, and I'm not pretending otherwise. And I think one of the things that we're saying to the Australian people right now is the world is an uncertain place. The global economy is a dangerous place right now. these escalating trade tensions, you know, and the rewriting of the global rules. This is a huge development. And so where I think the governing intersects with the campaigning is to say to people that this would be a crazy time to take a risk on changing the government. And because there's always a premium on stability and responsible economic management, but especially in times like these.
I mean,
but specifically what we've got is a trade war between America and China, right? And 145% tariff versus 125% tariff, which means that there'll be no trade between those two countries, essentially. It can't be trade with that sort of tariff. So do you and the government assume that those tariffs will stay in place and that therefore trade between America and China will collapse? And then, and have you thought through what that means for Australia and what Australia needs to do about it?
Yeah, I mean, first of all, it sounds a bit glib, but first of all, kind of assume nothing. You know,
no, but you've got to assume. You've got to look at what's.
You've got to make assumptions about what it means for us.
No, but what's there now? What's happening now? Not an assumption about what might happen.
Sure. We think about it in three ways. First of all, is the impact directly of these tariffs on Australia. We think that they are manageable. Secondly, what does it mean in a comparative sense, our tariffs versus tariffs imposed on other countries? And then thirdly, most substantially, most consequentially, is the impact of, you know, the two big beasts in the global economy going at it. And for us, that's the most worrying part of it. And if you look at our treasury modelling, we've done 3 updates to that now. And always the biggest part of the downside is the impact, not the direct impact from the US in Australia, but the impact on China flowing through to us. I think from memory, something like 80% of the downside in the last modelling was because of China. And so that is the bit that worries us most.
What downside? What is it?
Well, we've put out some modelling about hit to growth and impact on prices, and you know, I can send that around again. But in summary, we expect to take a hit to growth. We expect to be a modest impact as well on inflation. But the biggest part of that impact is the China impact, not the direct impact.
Heaven forbid, iron ore could actually go to the $60 a tonne your Treasury's been forecasting for the last
now.
decade.
It's
You've gone up to 70, have you? Only $30 under what it actually is.
Can I say something about that cheap shot that Stephen took about my budgeting? You know, we have been below that glide path in the last 12 months. And I'm not saying you necessarily, but
for a nanosecond.
Well, I think it's good to be conservative about the iron ore price and commodity prices. I do think that, but we have been below that glide path in the last little while, and even today, I think the iron ore price is a little bit down. And so it helps to be conservative about that.
I was going to ask a question about business going on. You've got $1 billion bond tender tomorrow. You've borrowed $80 billion so far this year. And can you believe it? Our 10-year bond rate is now the same as the US, 4.36%. That's never happened. So we can sell our money cheaper than the Americans can because Trump's consistently inconsistent. The bond vigilantes are out for him, and we're getting relatively cheaper money.
Yeah, I think this is one of the fascinating elements of the last couple of weeks. You know, I read it, the Fin, I see it, and all your stuff, is the fact that those 10-year treasuries used to be seen as where you park your money when the world's going mad, and now it's seen as people are expressing less confidence in the future of the United States, and you can see that in the way that bond pricing is changing. I think if you'd asked people 2 or 3 weeks ago how this was going to play out, I think maybe that element of it that you raised, Stephen, would be the thing that people weren't quite anticipating.
Is there any, if you think about the last, 40 years, America's always been the safe haven. Is there any, do you see any risk to that over the last couple of weeks that safe haven status is under threat?
I think investors are, that very clearly. I think certainly this sense of the US being the most reliable, most responsible player in the global market is at risk. And, you know, for us, our response to that, however you want to analyse that, our response to that is a kind of a no-regrets response, because as the Prime Minister said when he was responding to the tariff announcement, you know, we're all about making our economy more resilient. That's important regardless. We're all about making sure that our exporters have more diverse, more reliable markets. That's important regardless. And thirdly, more engagement is always good. And so, even thinking about in the midst of the campaign, as we said before, speaking to our Indonesian counterpart, Korean counterpart, the UK, and there'll be other conversations, no doubt. I think this has sent a signal to the world that you can never have export markets which are diverse enough. You want to make sure that you've got the right, less risky approach to your export markets. And we learnt that from the China trade restrictions not that long ago as well. Similar message from that. The world is fragmenting. That's one of the big shifts in the global economy, is much more fragmented, much more volatile, much less certain. And in that world, we want diversity of markets, we want more engagement and more resilience in our economy, and that's really our strategy.
Are you saying that the world is deglobalising after a few decades of globalisation?
Yeah, I think so. You think about that big period of relative calm, really from the end of the Cold War to the beginning of the GFC. You had that kind of, I think people have called it the Great Moderation, that period. And then all of a sudden we've had 4 economic shocks in less than 2 decades. GFC, COVID, inflation spike, escalating trade tensions. 4 big shocks. And these shocks used to be seen as kind of punctuation in long periods of calm, and now we're getting this accelerating instances of economic shocks. And I think that goes to the fragmentation. That big, long period of globalisation after the end of the Cold War until the GFC, and now it's being chipped away at by these economic shocks, where people have realised that their supply chains weren't as reliable or as resilient as they wanted them to be. There's a lot of geopolitical drama around the world. There's a war in Eastern Europe. There's a collapsing ceasefire in the Middle East, and all of these things, I think, make the world more fragmented. And so for Australia, so that we don't get too kind of doomy and gloomy in this conversation, for Australia, there's challenges everywhere around the world, but we've got a big chance here because we made good progress in the economy the last few years, genuinely turning a corner as the world takes a turn for the worse. We've got a good plan. We've got good trading relationships. Our industrial base we can make more resilient, and we will. But we've got a lot going for us in this world of churn and change. And one of the reasons why we're seeking a second term is because we think that we can do a better job managing all of that churn and change.
So both parties have decided that housing is the main issue, and both parties are doing stuff to help people buy a house. You're doing Help to Buy plus the 5% deposit. Coalition's doing the mortgage tax deductibility thing, and the economists and everyone is getting stuck right into both of you for pushing house prices up and everything. I don't particularly want to get into that, but because
you haven't plugged you should be plugging the quarterly essay, Alan. At this point, you wrote a whole thing about housing.
Best-selling quarterly essay for Grandpa Kohler. Best-selling.
Are you relying on us to plug this thing?
Yeah. we plug it every bloody week.
You're the king of housing. The challenge is stopping Alan talking about housing for the whole session.
That's right. Just stop me talking about housing.
Yeah.
So look, the thing is, what you'll say is, and it's fair enough. You've got the $10 billion thing for 100,000 houses, right? That's the new policy.
Over 10 years, $8 billion in loans.
It's over 8
years.
Over 8 years, right? And it's $2 billion in grants, $8 billion in loans. But the thing is that 100,000 over 8 years is 12,500 a year. The National Housing Accord is 1.2 million houses over 5 years from mid-2024. Mm-hmm. So the first or the most recent data we've got on housing completions is in September, for the September quarter, which was the first quarter of the 5-year period, and you're running at a rate of 56,000 behind.
Yep.
Right. So there needs to be a 30 to 35% increase in house completions in order to meet the Housing Accord target. So 12,500 a year from this new policy is nowhere near it. Right, I mean, you're not. What I'm suggesting is you're not really serious.
We are serious
about dealing with the shortfall of housing because you're nowhere near it.
We are serious, and it's important to remember that the announcements that we made on Sunday are not the beginning of our efforts in housing. We're talking about the biggest ever Commonwealth investment in housing, $43 billion we've found room for in 4 budgets to build more homes, because as you know, as you've thought about and written about deeply, probably everyone here has, housing supply is one of the defining challenges in our economy. You wouldn't have written that quarterly essay if that wasn't the case. And so we know we've got to build more homes, and we've got to build them as quickly as we can. I want to give you just a few sets of numbers. I don't want to snow your listeners with numbers, but I've got the little handwritten page here, Alan, which is about what we've been able to do since we come to office. So if you think about construction costs, they're going up 1.6. They were going up 19.4 when we came to office. Approvals are going up 16.1. They were falling 21.6 when we came to office. Investment growth in housing is growing 2.5%, was falling 5.1%. In new builds, growing 3.5%, was falling 8.4%. I promise you that's the last time I read out that many numbers. But what I'm trying to convey is that we are turning things around. The construction pipeline is not what we need it to be. That's acknowledged. But we are turning things around, and we've got this absolute mountain of Commonwealth investment going into housing because supply is the main issue. And you know, without getting too partisan about it, I think Sunday sort of set out the choice when it comes to housing, because what we're proposing is more homes and smaller deposits. What our opponents are proposing is fewer homes because they want to cut the Housing Australia Future Fund, and higher prices because they're not doing as much on supply as what we're proposing on supply. And so, you know, I respect your opinion, but at the core of your question, you know, that we're not taking it seriously, I think that is on any available factual analysis.
I'm saying
not
that
quite right.
You might be taking it seriously, but you're not doing enough at this point, right? So, but look, do you accept that the purpose of increasing supply and the policies that you've brought in is to make housing less unaffordable? Is that that's the purpose of it? It's to
drop house prices.
It's not to drop house prices, but to stop them rising. Would you accept that? We need do you accept that we need to stop house prices rising for a while in order to improve affordability?
I'm sorry I keep interrupting you. It's not deliberate. I spent last evening sitting next to Angus Taylor with Sarah Ferguson across from me, so habits.
Yeah, but you kept saying nonsense to him. So at least you're not saying that to me.
I think the best way to answer your question, Alan, is to say that we want more affordable options in the market. You know, I think it's the reality of the housing market and asset growth more broadly, that house prices go up over time. Our job is to make sure we're introducing more affordable options. So 100,000 more affordable options for first home buyers announced on Sunday. Some of the other work we're doing, the Housing Australia Future Fund, which is about social and affordable homes. We know if we build more social housing, we take pressure off the whole market. And so it's making sure, the best answer to your question is we are making sure that there are more affordable options being introduced into the market, because the big challenges, the two biggest challenges which we're addressing simultaneously, first of all, supply is the biggest one. Second of all, getting into the market as a first home buyer, and that's why what we're proposing on deposits is so important as well. And those two parts of a bigger, broader, more ambitious policy will work together.
Is housing the work of a decade to fix? To your point that you've been at this for a while?
Yeah, I think the nature of the housing market is that, you know, if you could click your fingers and build 1.2 million homes, somebody would have done that already. There's no absence of enthusiasm from a Commonwealth point of view to provide the funding. You know, we're finding $43 billion in 4 budgets is hard. We've made it a priority. And also don't forget, we had all of the Senate shenanigans that held up the Housing Australia Future Fund, the Help to Buy. Some of that stuff, I think, from memory, was held up for 8 or 9 months. And so we do need to go faster, and we do need to build more, but we need to recognise that everybody needs to do their bit. The Commonwealth's doing their bit. State governments are working out what they can do on planning and zoning. The industry's got to do their bit. I speak to the big institutional investors that you talk to in the course of your work all of the time. We've all got to do our bit. And the 1.2 million target is ambitious, and it will be difficult, but we can get there if everybody does their bit.
Now, a lot of builders have been going broke. What about something such as skilled migration for more construction workers? I mean, people say that the Labor's relationship with the CPU and the unions mean you can bring in nurses, but you can't bring in tradies and people who actually will build houses. And all the big developers are saying there's labour shortages, big infrastructure projects are soaking up all the talent. Is there a solution partly on construction costs with more skilled migration to work in residential construction?
There's a role for migration. And obviously there's large swathes of your question that I would contest, but I know you're just putting it to me to get my sense of the workforce pressures. there are substantial workforce pressures, very, very substantial. I meet with builders, developers all of the time. It's why it's so important. We've got the incentives for people to stay in building apprenticeships. It's why the free TAFE's so important, and migration will play a role as well. It's not an either or. We're training as many Australian builders as we can, but there's a role for migration too, because with all of the Commonwealth investment, all the goodwill at 3 levels of government, all the interest in the national political debate about housing, one of the most important elements of that is having the people to build the homes, and that's why we've got a number of policies which go directly to that.
I just want to briefly pivot back to the Trump situation and with the tariffs. Trump wants to do a deal with everyone. I'm just trying to get an understanding of what would an Australian deal with Trump look like. Like, you've agreed we're going to kick out the Chinese owners of the Port of Darwin, and that's now bipartisan policy. Presumably we have to open up beef because the Americans are complaining about beef and pork not being able to get in. We're not going to move on the PBS. You know, can you force Qantas to buy Boeing jets rather than Airbuses? So how do you think a deal would look? I mean, Trump's even been writing to our universities about DEI, access to rare earths. I mean, he's leaned on Ukraine for their rare earths. Can you see an American deal about them getting access to rare earths? And you have actually rejected some Chinese investment in some of our rare earths. So it has been a sensitive issue for you from a foreign investment point of view, that Chinese rare earth situation.
Yeah. Look, I think you touched on a few really important considerations in your question, Stephen. I mean, we have made it really clear that our biosecurity arrangements aren't up for negotiation. Our pharmaceutical benefits scheme is not up for negotiation. And the sorts of things that we've been discussing with the Americans for some time, before the announcement and subsequent, I think critical minerals do play a role in that conversation. You know, we've got so much of what the Americans need and what the world needs when it comes to critical minerals. And we've got a pretty strong hand to play when it comes to that. But this discussion that we've been having with the Americans has been going on for a while now. I went to DC and spoke to my counterparts over there. The trade minister's been doing a great job, foreign minister, the PM, the ambassador. We've all been making the case for Australia. And the case for Australia is the Americans run a big trade surplus with us. We've got an economic relationship of vast mutual benefit. We've got more work that we can do together in areas like critical minerals. But we're not prepared to trade away the things that we are proud of in the Australian economic policy architecture, like the PBS and biosecurity and all the rest of it. And the Americans know that.
There's likely to be some stuff dumped in Australia that would otherwise go to America. What are you going to do about that, if anything?
Yeah, well, dumping's got a very specific meaning in this context, and one of the 5 policy changes that the PM announced on, about half an hour after the President Trump made the announcement was about strengthening our anti-dumping regime, and so I think that's the bit you're referring to, Alan. But also, as we think through the impact on inflation in the Australian economy, we are trying to work out how much of this Chinese or Vietnamese or other Asian trade that would otherwise make its way into the US market, how much can we anticipate making its way into the Australian market, and what does that mean for pushing downward pressure on prices? And if you think about the sorts of graphs you put up at 7 o'clock on the ABC, Alan, I think one of the most interesting things to try and disentangle is the inflation story from these escalating trade tensions, because ordinarily when our dollar comes down a bit, as it has, ordinarily that means more inflation because imports are more expensive. But coming across the other way is, are we going to get more goods from Asia? Does that mean downward pressure on prices? And also the global oil price has been fascinating. The global oil price in the middle 60s, it got down to the low 60s. People can expect to see that in one way or another in Australian bowsers at some point. There's a lag. And so there's a lot of cross currents when it comes to inflation. And so I think you mean dumping in the most specific sense. But in terms of the way that trade is diverted, I think the most interesting part of that is what it means for Australian inflation.
Jim, being from the Financial Review, I'm legally obligated to ask you about productivity. Has it been
in the contract?
It's in the contract. Has it been a barn burner of a topic on the campaign trail?
I'm not sure in the way that. I'm not sure it has been in the way that we think about it in a kind of high-end way. But certainly there's an appetite, I think, out there for people to understand how do we make our economy stronger in the face of all this global uncertainty. And they know that I think people know that if an economy is competitive, if it's resilient, if it's more productive, then that makes us more able to weather and withstand these international shocks. I'm not sure that every table and every cafe in Australia is talking about productivity right now, but I think there is an appetite to understand, what our Future Made in Australia agenda means, for example, for an industrial base which is broader and deeper and harder, powered increasingly by cheaper and cleaner energy. There's a sense of people know that the world is difficult and that the stronger our economy can be in the face of that, the more likely we are to keep unemployment low and all of those sorts of things. And so I think there is an interest in the economy, whether they talk about it exactly the same way that people might talk about it on the opinion pages of the Financial Review. And I think there's a choice here. I've been discussing it with both of the editors you've had over the last little while, and there's a sort of a lively debate about productivity. I think the conversation about productivity has been artificially narrowed for too long. People see it almost exclusively in the world of industrial relations. I think our opponents see it in the world of industrial relations, in their sense, kind of working harder and longer for less. I've tried to deliberately, as Treasurer, broaden the conversation about productivity, because I think the productivity gains we'll get in our economy, recognising that productivity outcomes have been too weak for 2 decades now, not 2 years, but 2 decades, is the energy transformation, the human capital side, teaching and training people to adapt and adopt technology in a world of artificial intelligence. The care economy is obviously an area of particular interest. Competition policy. We've done more competition policy than any government for a very long time. Mergers and acquisitions, non-compete clauses, national occupational licensing to cut red tape. And so I've tried to broaden the productivity conversation. And one of the things that people can expect is whoever wins this election in a few weeks' time is going to get around the middle and then the third quarter of this calendar year 5 big pieces of work from the Productivity Commission, where we've said these are the frontiers that we think will matter most to productivity. Go away and do a whole bunch of work, while the partisan players are punching on in this election campaign. Go and do all of this work, and then whoever wins, give them a piece of considered thinking on this. And that, I think, is a demonstration about how seriously we take the challenge.
But the Productivity Commission has already done the work. I mean, they had their 5-year report 2 years ago, 71 recommendations, 1,000 pages. I mean, what of those recommendations have you done?
Yeah. I'd have to recheck the numbers, but there was a bunch of stuff we have progressed and a bunch of stuff that is being progressed.
Non-competes is one of them.
I'm really proud. I mean, I want to hug you, Stephen, for saying that, because I would love it.
Steady on.
I would love it if more people understood how significant that change is. Millions of Australians are caught up unnecessarily in these non-compete clauses, even people who might be barbers or, people who are working in the services sector. And so we're abolishing that for everyone except high-income earners. And the PC has told us that there'll be billions of dollars in extra activity. There'll be higher wages for people because you can move around more freely and find higher wage opportunities. And so non-compete clause reform, and I shout out my colleague Andrew Lee here, who did a heap of the work with me on this. That's an important reform, and it's an example of the sorts of things that we can do to make our economy more competitive, more productive in the face of all this international uncertainty.
Is there a signature macroeconomic reform of the last 3 years that you'd like voters to sort of have in their mind as they walk into the pre-polling station or the ballot box in the next couple of weeks?
Look, I think the most important big change to our economy that we're overseeing is the energy transformation. When I speak to my predecessors, including Paul Keating and others, the big change that we're seeing in our economy, which is equivalent to what we saw in the 1980s, is the energy transformation. There's a number of elements to that in a policy sense. And so I think that'll be the biggest thing. When people look back on this government, I think that will be the biggest thing that they focus on. But we've done a heap more economic reform than people have acknowledged. Institutional reform in areas like the Reserve Bank. We're reforming the payment system. I reformed foreign investment regime, reforming mergers and acquisitions. There's actually a heap of reform that we have done. And I think that is, for some reason, either accidentally or deliberately diminished when people think about our first 3 years. We're enthusiastic reformers, but we work through it in a methodical and considered way. And if you look at the list of our reforms over the last 3 years, I would stack that up against reforms really of other governments over the last 25 years or so.
You talked about speaking to your predecessors. I think you've got 8 or 9 living treasurers out there from, Howard, Keating, Hockey, Costello. Do you talk to any of the other ones apart from Swanee?
I talk to Wayne from time to time. I talk to Paul from time to time. Obviously, when Peter Costello was the chairman of the Future Fund, I used to meet with Peter. I've run into Ralph Willis. I've run into John Dawkins.
But no Josh? I mean, you and Josh seemed to get on so well when you were shadowing him there.
I texted Josh on the weekend. And I
bet you said you'd be doing a lot better if you were leader, apart from Monique Ryan. Because, I mean, that's an interesting question. If Josh had been up against Albo here, it could have been quite different. He would have been a very different leader.
Well, Josh, I don't mean to be unkind to Josh, but he lost his seat. And he doesn't work here anymore. And so let's be... I
struggling along at Goldman Sachs.
I don't mind Josh. I think people know that I don't mind Josh. I texted him on the weekend to check in and see how he was travelling. And I've got absolutely no beef with Josh.
He's fine.
Yeah, he's going fine.
He probably said, Jim, I love it that Macquarie's included in the big banks tax and Goldman Sachs is not. I mean, why isn't Goldman Sachs paying the big banks tax? Where's poor old Macquarie's chipping in the 1.7?
You're going to get a call from Josh. You're going to get a call from Josh about 5 minutes after this airs.
He would have said Carlton's finally won, so I'm good again.
He did reference Carlton.
when you texted him, he was probably umpiring the kids' footy game, which he never used to do.
Yeah, well, one of the things, to be super kind to Josh, one of the things you notice when people leave politics is all of a sudden they look younger, healthier. He's a couple of shades darker in his tan and all of that. But he seems to be going well. So I speak very, very rarely, occasionally with Josh, but mostly Paul and Wayne.
So we're going to move to readers' questions now, which we've got tons of. And before we do that, just have a quick word from our sponsor.
When markets go sideways, it's easy to feel lost. That's where Intelligent Investor steps in. For years, Intelligent Investor has helped countless subscribers grow and protect their investments, even in the most uncertain times. You can grab a 12-month Intelligent Investor Essential subscription for just $330. That gets you Alan Kohler's Weekend Briefing, CEO interviews, Talking Finance podcasts, and much more. And this month, there's a bonus. You'll get complimentary digital access to the Australian and the Wall Street Journal for a full year. That's $520 in added value, absolutely free. It's the perfect time to get expert insights and stay one step ahead of the market. But you need to hurry. This offer ends on April 30. Subscribe now at intelligentinvestor.com.au. Terms and conditions apply.
Okay, first question's from Joanna. We saw the US bond yield go up quite rapidly last week. If the US bond yield keeps going up, can it possibly cause a financial crisis and or collapse of some US banks? And what about Australian banks?
We're not anticipating that. One of the, when I did that kind of flurry of meetings with regulators and the Reserve Bank and others last week, there were a lot of assurances about liquidity. And people, I think, are relatively calm about that.
They're only worth $600 billion. I think the big four struggling along there. So,
but I think there was a sense of calm amongst everyone I spoke to about some of the liquidity challenges, and I'm really confident. I think, as the Reserve Bank governor said when she released the statement after the Council of Financial Regulators meeting, our system is very robust. The liquidity challenges are being managed. And I have a degree of confidence but not complacency about that.
Doug says, would you and Labor consider building the Australian Fannie Mae so Australians could access 30-year fixed-rate mortgages? Seems to be working well for the Americans. This would give families with mortgages so much more room to manage household financial risk, and surely the super funds would be interested in a secondary mortgage market.
Yeah, I mean, I don't want to be kind of glib about this, Doug, but I don't think now is the time to be seeing what we can import from the US in a policy sense. I genuinely don't mean to be a smart aleck about that, but I feel like our system is robust and well regulated, and people have options when it comes to home loans. Interest rates have started to come down as well. There's an expectation in the market of, I think, another 5 interest rate cuts this year, and so I've not been attracted to that solution. Doug, you're not the first person to kind of pitch it up to us, but it's not something that we're proposing to do.
Now, Jed says, a question for Jim. If re-elected, will you nationalise Transurban? Just the Australian assets. I like Stephen's idea. Also, please discuss the pros and cons of an inheritance tax. Would the average battler be better off if an inheritance tax was implemented, especially if the revenue funded tax cuts for battling working families? It's good enough for so many other countries. Why not Australia? Now, I should say, your seat of Rankin, I think you've got the Logan motorway going through your seat, don't you? 320 million a year in tolls your constituents are contributing to on that. Why does Australia, unlike any other country, have this giant privatised toll road company ripping $1 billion out of the motorists in Melbourne, Sydney and Brisbane? Surely it should be nationalised.
Which is a tax, really, the road,
and
road charges.
And the roads are all coming back to the governments anyway at the end of the concessions, and it distorts urban planning. So very cheap at $65 billion.
If you thought Alan's quarterly essay was a frequent topic, Transurban's travails.
Stephen's got a quarterly essay coming on Transurban.
His constituents are in the heart.
It's a weekly essay.
Gouged every day of the week as they drive to work.
Couple of things about that. I mean, when you first read out those 2 elements of the question, I thought we'd found Adam Bant's pen name. But if that's not the case, look, on toll roads, in my neck of the woods, people have got other options if they don't want to go on the toll roads, which I think is important. Well, not really. I mean, there's some major arterial roads in my neck of the woods that are free. And a very, very quick plug for my local area. One of the reasons why industrially my part of the world is so exciting is because it's where all the arterial roads come together in southeast Queensland. That's why people are so interested in the most important electorate in Australia from an economic development point of view. And so, and to be upfront with you, I don't actually get a lot of grief or a lot of complaints about the Logan motorway, and I confer with Transurban from time to time. People have got options. It's an important way to make us an industrial powerhouse, a logistics powerhouse in our neck of the woods, and so I'm not proposing to change those arrangements.
It is a much hotter political issue in Sydney.
So what about an inheritance tax?
Yes. If it was bipartisan, it makes a lot of sense, but no one side will go alone. But if the two of you got together and goes, everyone else does it, we should do it too.
On the inheritance tax?
It's totally logical.
Zero chance.
Absolutely logical.
Zero chance.
Zero chance.
Because the Libs will never do it. Yeah.
Well, we won't do it. And let me just tell you something I'm worried about. We've got 18 days to go in this campaign, and you can see the beginnings on social media of this, the lies that get told there, the misinformation and disinformation, and you can see the Liberals limbering up for a scare campaign on inheritance taxes. We won't go anywhere near it, and that we've made that very clear. And if people read that on social media, they should know that that is absolutely wrong.
So you're also saying that it's absolutely fine for 3 families, Gina Reinhart, Andrew Forrest, Clive Palmer, to be worth $114 billion between them, all on state-owned iron ore in WA. State government over there has got a $40 billion debt, massive inequality, and none of those 3 families should pay any inheritance tax at all, even though they're worth $114 billion on the back of Australian-owned iron ore.
That's our view. Couldn't be clearer.
There you go. There you go. Put on your glasses.
Speaking of scare campaigns, Andrew says,
how come Stephen gets all of the lefty questions? How does
I'm a former Kenneth.
he chose the
spin doctor.
When you sit down and allocate the questions,
he picked his own questions. Andrew says, do you think negative gearing is beneficial for society?
I don't think changing it would make a...
That's not the question.
Well, it's part of a suite of tax arrangements which help people make investment decisions. And the reason why we're not proposing to change it comes back to where we started this chat. And this chat was about the primary focus being supply. And we don't think changing negative gearing would mean more homes. And so that's why our focus is elsewhere.
All right. Tom says Tom reckons that Dutton's proposed tax deductibility for mortgages taken out by first new home buyers is a step in the right direction. Therefore, a question to my local member and treasurer. Does Labor see any merit in the idea of allowing first home buyers to use pre-tax dollars to pay for their mortgage? If so, how would you, or if not, how would you redesign the tax to make it your own?
We don't support what the coalition proposed. And the reason for that is we think that they'll just push up prices without building more homes. And I think that's been the overwhelming sense that that economists have made of it in the aftermath of the coalition making that announcement. And so I say to Tom, if you care about housing as much as we do, and it sounds like he does, the best thing we can do is build more homes. Next best thing we can do is make deposits smaller. And that's how we're changing things.
Now, more than 50 of our 62 questions were from men. So it's great to get a question from Alice. Jim, I work in a mine in the Hunter Valley and we seem to receive no direct tax reductions and work long shifts to receive fair pay, but it seems we're the missing middle Australian family who don't qualify for government subsidies, work hard and seem to pay a lot in tax at the most expensive time of our lives in raising our children. My husband and I were looking forward for many years to seeing the Stage 3 tax cuts, which you then changed. Do you think you could throw us a little bone and maybe let us claim a modest tax deduction for the school fees we pay? Especially after Dutton has now opened the door in a limited way for tax deductions of home mortgage interest payments.
Yeah, I mean, thanks, Alice. I mean, first of all, everyone gets 3 rounds of tax cuts under this government, including people who are doing pretty well. And so when we changed those Stage 3 tax cuts, what we did was ensure that everyone got a tax cut. And if you're at the very top of the income spectrum, instead of getting $9,000 a year, you get $4,500 a year, and so not missing out. That's the first point. Now, Alice referred to Middle Australia. There was a really interesting piece of analysis done at the ANU about the cumulative benefits of our 4 budgets by income quintile, and the biggest beneficiaries have been people in the middle income quintile from our 4 budgets. And that's partly because of our tax cuts, but also our cost of living relief, the way that we've been managing the economy. And so this has been a government for Middle Australia. This is a government for Middle Australia, and people should expect that to continue.
Aaron says, what steps will a Labor government take to ensure large gas, oil, coal and iron ore multinationals pay their fair share of tax and or royalties for the enormous profits they make off our natural resources? Surely the free ride should be over.
I think one of the things that doesn't get mentioned a lot, I'm not sure why that's the case, but a couple of budgets ago, I substantially changed the PRRT so that we were getting a bigger return for offshore gas.
The PRRT is the Petroleum Resource Rent Tax.
Which will bring in $1.45 billion this year, according to your latest budget.
Do you know that we're raising an extra $2.4 billion because of the changes that I made? And I do accept, actually, and I'm serious about this, I do understand that there is a constituency in Australia for us to tax them more and to tax them harder. But billions of dollars extra in return for offshore gas resources are flowing into the Commonwealth budget. And that helps us pay for things like strengthening Medicare or cutting taxes. And so I think even for people who want us to go further and faster on resource taxes, I think that they should acknowledge that we made an important change and we're getting a bigger return as a consequence.
Now, talking about extra revenue from tweaks to legislation is a useful pivot to a theme in a range of our questions, which is why did you put, I think it was $3 billion plus in extra tax revenue in the forward estimates from the proposed change to the tax on unrealised capital gains for super balances above $3 million, when it's been blocked by the crossbench, it's not law. will be decided by this legislation. Why did you put that in the budget and defend it? And a lot of our listeners are very unhappy about setting the precedent of taxing unrealised capital gains.
No, I understand that. And this policy change was announced years ago. We did a heap of consultation, and the consequence of that, or the outcome of that consultation, is that nobody can suggest to us a better way of making what are very generous concessions for people with big super balances, slightly less generous. Still a generous concession, but slightly less generous, in a way that helps us fund Medicare, or helps us fund aged care, or helps us fund cost of living relief. And so it's still in the budget because we believe it is the best way to raise a bit of extra money to help with the budget without taking away what is still a generous tax concession for the 0.5% of people who have balances more than $3 million.
Speaking of questions that we had a sort of running theme, there was a lot of questions, I guess, getting back to the inheritance tax issue, the broader question of taxing labour versus taxing wealth, and to deal with wealth inequality that was seen in recent years. Aidan says, will the Labor Party ever grow the cojones to slow down the rapid increase of wealth inequality, particularly after the outcome of the 2019 election, where Labor did try some sensible reform on franking credits and negative gearing, which were rejected? I mean, how do you think about, perhaps more broadly, that labour versus wealth tax? Those inequalities do seem to be sort of fueling a lot of the polarisation we're seeing in politics.
They're going to change the locks at the Fin Review when James tries to go back.
Oh, you're
going to wonder who the guy is sitting at your desk.
No. We're well, look, I mean, I think it goes back to the housing issue, doesn't it? Lots of people feel like they're getting left behind, and this is another way.
Yeah, I think one of the main motivations for the changes that we made to the Stage 3 tax cuts and the subsequent tax cuts that we funded in the most recent budget are about recognising that younger people and people on lower and middle incomes, they deserve proportionately more help. And again, to go back to that ANU research that I referenced before, it's been deliberate from our point of view to try and make the tax system a bit fairer for people who don't have a lot. And that's in recognition that there's a role for policy in making sure that the most help goes to the people who need it the most, whether that's in the tax system or in our cost of living help.
Now, Stephen says, why does the federal parliament ban CSL from being taken over and no other country? And why is there a ban on nuclear power supported by the Labor Party? I mean, sure, don't fund it yourselves, don't support Dutton's policy, but shouldn't the legislative ban on any sort of nuclear commercial activity in Australia be lifted, given that we've done AUKUS and all that, and we own 30% of the world's uranium reserves?
It would make no difference if we did, and let me tell you why.
So why don't you do it?
Well, it would make no difference because, I mean, you probably knock around with investors as much as I do, Stephen, probably everyone here does. I mean, investors don't want to go anywhere near nuclear, and that's because it's dumb. It takes longer, it costs more, it pushes up electricity prices, it introduces more uncertainty into the system, and it turns our back on this vast opportunity that we have, our combination of advantages in Australia. And so, behind closed doors, investors have a good chuckle about what Peter Dutton and Angus Taylor are proposing, and whether we change the moratorium or not wouldn't make a difference to the way that they think about these things. And so this is one of the big choices at the election. We've got these $600 billion worth of nuclear reactors, built decades down the track, which mean higher energy prices. And they released this modelling, which is laughable, which says that our economy will be much smaller and our energy needs will be much smaller as well. And so, it makes no sense, is the charitable way to put it. It makes absolutely no economic sense. And that's why it would make no impact if we changed the moratorium.
That was half a dozen skateboards went past there.
Yeah.
School holidays in Melbourne.
That's it. Georgie says, I work as a university lecturer. Our sector is currently seeing mass redundancies and cuts and is struggling to keep pace with education in the face of AI, reduced attention span, less prioritisation of research and less funding. In the past few years, big changes to policy of university structuring and financing will see many close down. With America challenging its own validity as an exporter of education services, how can Australia be better positioned to capitalise on this export and highlight this wonderful sector, especially with pressure to reduce international student numbers already closing down courses across the country?
I'm a huge supporter of the university sector, and it's not true that funding from a Commonwealth point of view is being cut. There are big challenges in higher education. We want to make sure that we're still that universities can still have foreign students, but in a way that is more manageable, more sustainable, but still making a big contribution to the way universities fund themselves. There are challenges to the teaching model. AI, online, there's a lot of disruption in universities. And so that's why I think it's so important that my colleague, Jason Clare, released the Universities Accord, which is really our vision for universities, more accessibility, making sure that more Australians from every part of Australia can get a university education. And so we recognise there are challenges and pressures, but we've got a plan. We're enthusiastically substantially funding the university sector at the same time as we make sure that the foreign student intake is manageable and sustainable.
Sam says Bob Hawke credited Singaporean Prime Minister Lee Kuan Yew's harsh warning about Australia's need for reform for kicking him into gear on ambitious structural reforms, covering tariff reductions, floating the dollar and banking deregulation. That was decades ago now. Who or what will be our modern Lee Kuan Yew that motivates your government into being bold and making sure that we set up the Australia to be competitive on the global stage for the next few decades and beyond?
Well, I think if you're looking for the so-called, the cliched burning platform, I think these 4 shocks in less than 20 years are really the big wake-up call for the world. And certainly we take these escalating trade tensions, the fragmentation of the global economy, the fact that the rules are being rewritten largely by the Americans, but also with these kind of escalating tensions. We do take that as a serious moment. And fragmentation is just one of the big pressures on the global economy right now. If you look at our intergenerational report, there are five big shifts from globalisation to fragmentation, from hydrocarbons to renewables, from IT to AI, from younger to older. And then the 5th one is the changes in the composition of our industrial base. And so we take those big shifts seriously. And the job for us as Australian policymakers, whether the election campaign kind of grapples with this in exactly this way or not, but our big challenge is how do we recognise there's all this churn and change in the world, and to make sure that our people, our industries, our employers, our country is a beneficiary of that change rather than a victim of that change. And again, we've got the reason I'm optimistic about the future, despite all of this madness around the world, is because I do believe that we can be a kind of an island of resilience in a sea of uncertainty. And that's because we've got this remarkable combination of advantages: industrial, meteorological, our skills base, our attractiveness as an investment destination. We've got so much going for us, that even as the world takes a turn for the worse, we've been turning a corner in our own economy. And one of the reasons, as you can probably tell from this answer, that I'm so fired up about trying to win a second term for our government is because we want to play a role in making sure that people are beneficiaries, not victims of all of this change. And I think that we can do it.
Maybe we just need a Norway-style $1.8 trillion sovereign fund as well. That would have been nice if that could have been put together in the last 30 years.
Scott says, why are you not taking more serious steps to rein in the NDIS? Now, can I just sort of broaden that a little and get you to reflect a bit on the NDIS more generally?
Yeah.
And do you think that the way it was set up in the first place was mistaken, in the sense that it was not sufficiently controlled in the structural sense? And do you think to some extent you've been mugged by it?
Well, I think you need to recognise, in fairness to the original designers, a program of this magnitude will always require ongoing attention. I think to deal with Scott's question first before I go to the broader issues, I think when we came to office, I might not have this number perfectly right, I think spending on the NDIS was growing about 22%. I think it was about 14 in one of our budgets, and we're getting it down to 8. And so that's still growing. It's still growing quickly. but it's growing much less quickly than when we came to office, and that's been deliberate. Now, the broader point I'd make about the NDIS is I know in my own work as a local member that how important the NDIS is for Australians with this disability. And so the assurance that we give people is all of our efforts to make sure that spending on the NDIS is more sustainable is not about trying to wind back the services that people need and deserve and should be able to rely on. It's about cracking down on the rorts, cracking down on the wasteful part of it so that we can deliver on its original promise, which is to look after Australians with a disability. We fund that enthusiastically, and if you care about the NDIS as we do, you've got to make sure that we protect it from people who are not supportive of it, and that means making sure that spending is more sustainable than it was a couple of years ago.
I'm going to throw one in that I ask at every takeover shareholder meeting I go to, which is becoming increasingly common. Australia is currently in the midst of an unprecedented deluge of takeovers that has contributed to listed entities on the ASX dropping in 25 of the last 26 months for a net reduction since January 2023 of 202 listed entities, or 8.8% to a 15-year low of 2,092. There were a record 29 major takeovers above 200 million last year. ASX is losing many long-standing names like CSR, Boral, Newcoast, Crown, Blackmores, etc., etc. Is this a problem for the nation, Treasurer, that our ASX is thinning out and we're becoming increasingly foreign-owned?
It's certainly something that ASIC's been interested in. You would have seen that ASIC has done some work about big companies coming off the ASX, and so I'm sort of reluctant to intervene in that in a conceptual sense. I like it that that ASIC has done that work and is doing that consultation, and I'll take the results of that consultation seriously. I mean, you follow this as closely as any Australian, Stephen. You know that it's been a very substantial trend, stuff coming off the ASX. I meet with the ASX from time to time to talk about it. I meet with Joe Longo at ASIC to talk about it from time to time. And I think it's good that they've done this piece of work so that people like yourself and other people who are informed on these matters can express a view.
I'm going to ask one of Stephen's questions. Jack says, have you tried running all the data that goes into the budget, interest rates, global outlook, government strategy, commodity prices, through DeepSeek or ChatGPT to see what they suggest? Would it be, or is it far off that the Treasury... Would it be far off from what the Treasury said in the government's latest budget? More broadly, how is AI changing your job personally?
What would they say on iron ore forecasts, for instance?
Haven't considered doing that, obviously. From my point of view, I think one of the things that I'm most interested in if we win a second term is working closely with my colleague Ed Husick and others. He's got an AI capability plan that he's working up. So from my personal considerations, the way I approach my job, AI is going to be one of, if not the biggest game changer in the global economy and in our national economy in the years ahead. And so we're getting our head around how do we make the most of that opportunity, not just to kind of clamp down on it with guardrails. Obviously they are important, but how do we make the most of the opportunity more broadly? And one of the things that I hear most about from investors, there's a lot of interest in Australia in areas like data centres, because data centres are effectively a combination of an energy play. You need space for them, you need secure, stable governments, and you need to be, ideally you be in Asia. And so there's a big opportunity there for Australia. And so from a personal point of view, I'm getting my head around the AI opportunity because I think industrially and economically it's going to be huge.
I just want to finish off with a question about Trump and America, which is not in the readers'
Question from Alan.
Alan's
Alan's
gone rogue.
Grandpa Kohler takes charge. Finish off,
Grandpa.
That's right. That's what I was thinking.
Well, he's 48. You're what, 72? This kid.
I'm reluctant to fact check you, but I'm 47.
This kid, he's so young. This treasurer.
He is. He could be my
Compared
son.
to you, Grandpa, he could be your son indeed.
This is getting off the rails.
Yeah.
Alan, ask your question.
Quick, Alan.
So, okay, now look, I'm just wondering, at what point do you start getting worried about Trump's obvious anti-democratic tendencies? I mean, and also human rights. I mean, he's just shifted this bloke called Garcia to a concentration camp in El Salvador, and the federal court and the Supreme Court have said you can't do that, you've got to bring him back, and he's refused. So he's refusing to do what the court's telling him to do. There's clearly a whole bunch of stuff they're doing that is, you have to say, autocratic. At what point do you call them out for that?
Let me try and make a broader point in response to that, because we don't sort of comment on every part of the bouncing ball of American domestic politics. I think there's good reasons not to do that. But there is a broader point here. If you think about what's happening in the world, there has been a shift away from the kind of central tenets of democracy. There has been an authoritarian shift in the world. You can read a lot of good books that you can buy at the airport about this big shift towards authoritarianism, and I think it is broadly troubling. And again, we've got a lot of challenges in Australia, including challenges to our democracy from misinformation and disinformation and all the rest of it. But one of the things that gives me heart about our situation is that we have resisted the temptation to go down that path. And one of the big differences in this election campaign, which I think you've seen laid bare over the last few weeks, is sensible people, certainly our government, sees what's happening in the US and elsewhere, the sort of politics and policies which are troubling, and we want to reject them. Our opponents see what's happening in the US and they want to replicate it. And I think that is sells Australia short. I think it's very damaging. We've seen their whole kind of make Australia great again stuff. They take their cues and their instructions and their policies from the US, I think, in a way that would make Australians worse off and make our democracy weaker. And so that element of it is troubling. But broadly around the world, there's been a shift to more authoritarian governments, and that's troubling too.
That's it. Thanks everyone for listening to today's bumper episode of Money Café with the Treasurer, Jim Chalmers. We'll be back next week with Stephen alone. Send in your question to themoneycafe@eurekareport.com.au. Till then, I'm Alan Kohler, founder of Eureka Report, etc.
I'm Stephen Mayne, etc.
I'm James Thomson.
And you are?
I'm grateful for the opportunity.
Thank you.